So today I want to share with you guys three day trades that I made today and yesterday. One being today and it's still open, and two being from yesterday, right before the FOMC meeting, and I think one was shortly after the FOMC meeting, with just paying attention and looking how the markets were going to react to the rate cut by the Fed. So first, I want to point out that the first trade I made was trading the volatility index, or the VIX, and the way I traded that was with a a correlated ETF to the VIX, that basically mimics the index and performs in the same way that the volatility index performs, and that ETF is called TVIX if you guys want to check it out. So basically, I didn't take a screen recording of me placing the trade because I'm an idiot and I forgot to, but if I look at my phone now, I can show you guys that if I pull up Robinhood, I can show you guys the trade I made. So I got TVIX pulled up here, and I'll put this screen recording somewhere on the screen so you can see it. So basically, if I go to my history, it says that I market bought TVIX $519 worth, 40 shares at 13 bucks, and I ended up selling $594 worth. So on that one trade, that was a $74 trade profit, and I sold it at $14.85. So I was mentioning on my video, the last one I put out, that with the FOMC meeting, it was going to be expected that we were going to get a lot of volatility, because whenever there's some type of fiscal changes or monetary changes in the policy of government, there always seems to be some volatility in the market. So I thought that I would test it out and play into that volatility. So basically, my thought process going into this trade was TVIX had set a bottom here at 1270. It set the high at 1398, and it set a double bottom here at 1270 again. Let me go turn off my air. Sorry about that. So it hit a double bottom here at 1270. So I figured that resting on support, it would be a good idea to start scaling into some positions. And that's always what you should do. Whenever there's a set bottom and you have price sitting on support, it's always good to scale into some positions, because you can always set your stop loss just under that level, and you wouldn't lose too much money. So basically, it said that I set my orders here at $13, and basically my first impression was to patiently wait and see how this equilibrium pattern was playing out. We ended up pushing up and setting a higher low here. And when the news came out with the rate cuts, the fiscal monetary change of lowering interest rates, then the market overall, let me show you the S&P 500. So if I go over to the S&P 500, you can see this sell-off, pretty rapid sell-off here. Once the FOMC meeting had started going, you can see this crazy drop down. That was all the volatility needed for the VIX to start going, and for TVIX to give me that $74 profit. So you can see here, it broke this level of resistance at 1398, and I ended up selling at 1485, which was around this level. And the reason I sold was because, honestly, I was scared that things were going to turn around and the market was going to perform a little bit better. That's usually what happens. So yeah, I ended up selling that order, but I'm not too pissed that I missed out on this another green candle. It could have been probably over $150 instead of $74, but I'm happy with the $74, and I learned my lesson. So next time, instead of taking out the full position, I might only take out 50% or 70% of the position. So let's get into the next trade I had. Now the next trade was I was looking at the gold miners. So not actual gold, but the gold miners. So here we have GDX. And with GDX, I was looking at the top here set at 28.41. The bottom was set at 27.23. We had a higher low set at 27.98. And basically, I was I thought this level here was going to hold at 27, but it ended up breaking bearish, and that's when I knew to start scaling into the inverse of GDX, and which is basically the opposite chart of GDX. So whenever you hear the word inverse or inversely correlated, that means that it does the opposite of what this asset does. So this asset, I'll show you here, this is the GDX miners ETF. So once it broke here, I went over to the inverse, which is dust, and it's 3 times correlated, so it's more volatile. And with dust, it's the same chart, but it's just flipped upside down. And it broke here, and that's when I started buying. So also, let me check my Robinhood and see when I started buying dust. So in my market history for dust, I have a market buy of $227, 25 shares at $9.09, and we ended up selling for an $18 profit gain at $9.80. So we bought at $9.09, which was right here. This was the signal. The break of this resistance, that was the signal to buy. And then I ended up selling at $9.80, which was right about here. Almost the top. I didn't quite get the top, but I started seeing some weakness, and it actually kind of fell into place because I had to go to work anyways, and I didn't want to be like not watching it at work. So I ended up selling almost at the top at $9.80, only an $18 gain, but it adds up. With the TVIX 75 and the 18, now we're almost at 100. So with that being said, I'll go into the last trade, which was a gold trade. So let me pull up the gold chart. So I had been watching this pattern here for gold a while, and I had been mentioning it a lot in my videos, and I was basically saying that I was patient, that gold was still looking very bullish as long as 1400 held support. 1400 was the daily higher low last time that gold broke out, and it ended up holding support. I put this picture on my Instagram here when price was sitting at 1400, and I said buy or sell. I ended up buying here, and look at the strong reaction, the strong rally after holding support at 1400 and actually breaking out. So let me show you what I did. I ended up buying the 3 times correlated ETF to gold, which is UGLD. So just like it's the same exact chart as gold, there was support here. In this case, the support was at 117, and yeah, I was buying. Let's see how many shares of UGLD. Oh, I actually did record my my trade with UGLD, so I'm gonna put that up right here while I'm talking about it. So yeah, I ended up scaling my orders around 117, 118, I'm pretty sure. And right now I'm at a $27 profit from this move. And so basically adding up all of those trades from today and the 2 from yesterday, we are at $119, almost 120, but for the sake of the video, just say 120. But yeah, It wasn't that hard of trades. Honestly, I was in the middle of editing and working and doing other things while I was doing it. But um, just paying attention to it and setting stop losses and getting a little bit lucky is all you need to make some profits. And also just being in the position to do so. You're not gonna get lucky by sitting around and doing nothing. You have to put yourself in the position to get lucky. So in my case, I was up for days watching these charts, tracking them, and waiting for the right moment. In this case, I didn't think gold was going to go back down to support, but it did, and I waited and I set my orders. And if it would have broke down, I wouldn't have been that upset because my stop orders would have hit and I wouldn't have lost that much money. But it didn't. It went in my direction, and I ended up making more money because of it. So that's just a wrap up of those three trades. Nice little $120 profit that I can keep building up in my in one of my accounts. So that's pretty much it. If you enjoyed the video, please let me know with a like and help me out with a subscribe down below. If you're on YouTube, if you're on Instagram, then hit me up with a follow. And also check out my Twitter at Supreme_charts. And also, if you're on LinkedIn, if you want to hit me up with a connection, I'd be glad to talk and connect and see what we can do, network a little bit. I'm all for that. So with that being said, I hope you guys got some value out of this. I hope it's inspired some of you to go out and maybe try some of your first trades if you haven't yet. And let me know how it goes. So enjoy the rest of your nights and keep trading.